Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Arnav Danthi, principal at Nuwa Capital; Amira Swilam, partner at VC; Salah, partner at Pitlane Ventures; and my co-host Jamie Lane from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Before we start talking about the news of the week, I want to tell you about OCTA, our new sponsor. OCTA is an AI-powered workflow automation platform that helps modern businesses collect payments faster, smarter, and without the back and forth. If you're a founder or a finance leader, you know that managing receivables requires 14 hours plus every single week. It's chasing corrections, negotiating payment terms, updating invoice details, and constantly following up with your clients.
OCTA automates the entire process, handling everything from invoice disputes to payment confirmations, so your team can focus on growth, not admin work. That's why more than 100 companies like Careem, Lean Technologies, and Algram trust OCTA to streamline accounts receivable. Check out OCTA at weareocta.com, that's WEAREOCTA.com, and experience the modern way to manage receivables.
Hi, everyone. Jamie, what's happening this week?
Let's maybe start at the cybersecurity side of things. CPX, they're an Abu Dhabi-based cybersecurity and threat management firm. They've acquired CyberSilk, Dubai-founded cyber AI startup. I do think they moved to Saudi. They might have moved their HQ after Wide Ventures back in 2023. But in terms of what CyberSilk, I suppose, are known for, it's simulating offensive cyber attacks to identify system vulnerabilities. So look, they've been building IP since 2019, including their exposure management platform Resonance. They've autonomous SOC agents and a threat intel system as well, powered by a global knowledge graph. In terms of the company's background, founded by Rami Al-Malak and Musab Hussain. Musab, a former Careem PM and well-known white hat researcher as well. About a number of headlines and kind of out of the blocks around kind of like 2018, 2019. They uncovered security flaws in like WeWork, MoviePass, a number of other companies, I think EA as well. So they got a lot of prominence in TechCrunch during that time. I wrote about them back, I think it was in August. And yeah, there's like a collage of the headlines that they garnered around that particular period. And there was a ton of coverage which they got. In terms of the VC funding side of things, as I mentioned, last raised a 9 million Series A in 2023 from Wide Ventures. Earlier backing came from Global Ventures, Dara Holdings, and Careem's co-founder Magnus Olsson as well. Interestingly, Global Ventures and Dara Holdings seem to be staying on board post-acquisition, which sort of suggests this isn't a kind of a one-and-done deal, more sort of a long-term integration under CPX. I guess from CPX side, it makes a lot of sense to sort of build a reputation as a full-spectrum security operator for government and enterprise. So this kind of gives them something they haven't had, and that's offensive-grade AI powered cyber products and an R&D engine that's actually been shipping quite extensively over the past couple of years as well.
And seems CPX is actively acquiring more companies. This is, I think, their second acquisition in 2 months. Let's start with this. Why sell so fast? They only raised pre-seed 300K and the Series A 9 million. It seems that it's still too early. If you have invested in SpiderSilk, would you have encouraged this acquisition or advise the founders to keep building, scale, get bigger, and target a bigger exit?
It's a great question. Interestingly, I think, as you mentioned, some of the VCs are staying on, right? So Global, who's been an investor in the company for a period of time, is staying on, and I think Dara Global. I'm not sure whether this means that the founders themselves wanted to step down because they've been doing this for a period of time, given the management of the business has changed, but the investors are staying on. So it could be that maybe the founders wanted to do something a little bit different. I haven't seen too many cases in my VC life where we see a change in the management of the company or there's an acquisition of the management shares. I just know one other kind of a time this has happened. So it could be that the founders want to move on to something else. And I think from a VC's perspective, if that's the case, again, a big if, you don't want to be kind of funding a business where the founders themselves don't want to kind of still be in it or still want to run it day to day. So it just could be a strategic change in terms of who's running the business. There's probably a lot of strategic stuff with CPX as well. It's interesting to see that it's a local or regional acquisition, so a local buying local. I think there needs to be a lot more of that in the region. And I think we're seeing that. I think even AstraTech is going towards that strategy of buying kind of local regional startups where synergies are available. So I'm not sure why they sold. It could be that there's a change in management or management wanted to take a different path. But I think the fact that the VCs are staying on could mean that the VCs still see the opportunity in the startup. It's just that maybe the management wanted to be changed. But that's my 2 cents. I might be completely wrong.
Amira, what do you think? Do you think it's an acquisition or an acqui-hire? Because CPX wanted the team, especially with Musab and what Jamie mentioned about him as a cybersecurity researcher.
Actually, this acquisition is very big change and win for the MENA region because it is very dominated industry for the upcoming years. And this is one of the most trendy industry right now for this sectors as better for the early stage startups. So the sweet spot for the exit right now, it is very important between 2 phases, whether from the perfect spot from product market fit and the scaling risk. So this is proven, it's a product very, very strong with B2B traction. And I think across the public and private sectors, there are more potential for scalability and for having the trust from their partners. This is moves into this exit. So I think this is coming to change the game for these exit scenarios coming from the MENA region, not the typical scenarios coming for the IPO and the world-class player having this industry and from different region, but having this from the government, from the private sector into their local industries. This is very interesting scenario for the exits because we need to have more changes in this industry because IPOs or acquisition is coming very rare. So when it comes to this phase, it's encouraging the early stage startups and encouraging the next startups having this model into having their likelihood of exit in different scenarios other than what we expected from the history of the exits in the acquisition and having this. So I think also the founders are super smart and they have their tech engine internally, so they have their superpower of this technology, which likely it is different than happening in the industry. So this is very unique product in terms of cybersecurity, and they have more potential for strategic vision regarding the scalability. So backed by CPX, backed by the Abu Dhabi Sovereign Fund and National Cybersecurity Fund, and they are huge fund. So having this opportunity from early on, giving them more track for more technology innovations and disruption in this industry.
I like that. So this is another path where sovereign funds can, or companies owned by sovereign funds can acquire national companies or local companies. Yeah. We'll talk more about this because I have more questions on that. Mo, what do you think in general about this acquisition? And maybe before you tell us about this, can you tell us why did you call your firm Pitlane Ventures? What does that mean?
I'm a believer in founders' supremacy. There is one group of people who are superior in the ecosystem, and that group is founders. And any ecosystem that thinks otherwise will never go anywhere. And in motorsports, founders are the drivers, the ones who go risk their lives. Gladly, recently, we haven't seen many deaths, but over the history, hundreds of drivers have died. And the only place where they can get surfaced is a place called Pitlane. Pitlane is where they change tires, refuel, fix the cars, depends on what kind of motorsport you are in. So one of my idols in venture capital is Vinod Khosla, and he always says there is no such thing as a venture capitalist. There is something called a venture, a service venture. So I was like, okay, what where do my passion for motorsports come in with my passion to support founders? And I was like, yeah, drivers go to Pitlane. I think founders should come to my Pitlane or something like that.
I love that. I love that.
So yeah, speaking of today's news, I
Yeah.
think this news makes me happy than most of the news I've heard from the region in years. Number one is I'm a sovereignty guy. I'm a guy who wants my company to make sure that me and my kids and my grandkids can have a say in the world. And if they cannot have say in the world, they have a say in their life. And sadly, in the last at least 100 years, that was not the case in the Middle East. A huge part of that was our lack in advancement in science. And right now, I want to see 100 companies in cybersecurity, and I want to see 100 companies in cloud, and maybe I want to see 1,000 companies in AI, and I want to see our own data centers, and I want to see our own whatever we can get our hands on, nuclear sites, our own fusion companies. We cannot move forward in the world if we don't have our security, our energy, and our technology. And I'm genuinely, and I'm not saying this because of anything that has to do with anything political. I'm a huge fan of what the UAE have been doing for the last 5 years, especially what they did with G24. Is it J24 or 42? J42 and Core.
G42.
Yes,
G42.
and Core 42, and all what they have done initially with ADGM, what they're doing now with cybersecurity. We have seen Google acquire Wiz for almost $34-35 billion, because we all know that in a world of AI, it's going to be very, very hard to tell. The line between me being a human or not is going to be insanely thin. And we're seeing a rapid growth in cyber attacks like never in history. And with the conflict we're seeing in the world now, that might be the next Cold War, if it's not already. So an Arab country deciding through its governmental entities or semi-governmental entity or government-backed entities to own its security future is insane. That's one. Two is this company have been building for the world from day one. They have been working with global brands and helping global brands solve problems. And I'm begging every founder in the Middle East to stop solving for the Middle East. If you have a solution that the world needs, you should be selling it to the world. You ask a very, very good question, why these guys had to sell? Most likely because it's so hard for them to fundraise. How many cyber security deals we have seen in the region in the last 5 years? Honestly, I don't have the answer, but I haven't seen many.
I can contradict
Yeah.
the last statement, Mo, because as we venture capital at Den, when we look at cybersecurity service or product, this is one of the most attractive startups that we are looking for, actually, versus last 10 years or what happened in the history. But actually, right now, based on the even 2030 vision, the deep tech startups coming for in biotech, cybersecurity. So I think the change, this game is changing right now for even the venture capitalists when they are looking for cybersecurity service with IP and deep tech and patent and a very good team, inclusive criteria for investment. This is a great opportunity, even if they are in an early stage.
Issue with fundraising for anything early stage in the region. It's the region appetite toward what is going to become the next billion-dollar company. And most of the appetite is going toward, for example, something like fintech or retail or e-commerce and other things. So the question is, do we have any Series B security deal in the history of the region?
Most of them, they are backed by corporate or big FANG.
Yeah, this is basically what I'm saying.
Not startup, yeah.
So this is why if I'm in their place as a founders, the government is coming to acquire me. Most likely, I can get a good package. I can get a good exit package, and it's gonna be tough for me to fundraise for a growth stage security company. I would have sold, honestly.
Mm-hmm.
And also, that's a security company that requires superior technology and data access that might have been the only way to get
Only way for it, yeah.
get the access.
Hold that thought, because I have more questions on that, specifically the data access and the government involvement in cybersecurity companies. But before that, in general, we're seeing those government entities swallowing or acquiring local startups to build their national champions. Is this the best path for MENA founders, or does it create maybe risk where government is dominating or controlling the tech ecosystem?
I don't think so. I think I align a lot with what Mo said. I think where you have specific sectors that are of national importance, and cybersecurity is extremely important to both the UAE, who's taking a much more active role in foreign policy, as well as Saudi, who's always historically done it. I think for certain sectors, the government will step in and they'll be a willing buyer, just like anyone else who wants to acquire them, right? They're going to compete with anyone else. So I think, if we take a step back and just connecting to Mo's point for a second, I think historically, and I'm speaking for Nuwa and then maybe some of the other VCs, it might be a little bit different, but I think historically VCs in this region have been unwilling to underwrite companies that have the ability to have global competitors, right? So if we look at what's been funded in the region, it's been, as Mo said, e-commerce, fintech, something that has a local element involved. And I think a lot of VCs here feel when it comes to sectors like cyber, where you have massive companies globally that are playing in the same space, they feel like, what can a regional company do that a global cannot enter into, right? A global company cannot enter and compete with. So I think when you look at certain sectors where global players are playing, unfortunately, that is also linked to national security in many ways and form. You're going to have the government step in some way and form to at least put an offer on the table. So I don't think it's necessarily a bad thing. I think it's great that the government is stepping in, as long as they're paying fair market price and they're competing with everyone else. It's great to have another buyer in the ecosystem for founders, right? I think the more buyers, the better it is for founders. So I think generally it's a net positive thing. I think to connect it to what we're seeing in the ecosystem, both governments here in the UAE and in Saudi has gotten much more involved in terms of the compliance of businesses, especially on data, right? Not necessarily on cyber, but we're seeing, for example, PDPL in Saudi come out, which is their version of GDPR. And just us as Nuwa, we've seen probably 5 startups in the last month that are going to address this problem, right? So as the maturity of the ecosystem, as it goes forward, especially on cyber, on data, you're going to see more and more startups try to address this. But again, we have to ask ourselves, can a local champion come out here, or can a regional champion come out of the ecosystem and win for PDPL and some of the other kind of, let's say, policies that come out in the region? Or can a global player come and just come and attack the regional and sell to the regional startup? So it's a good question I think we're having internally as well. But you're going to see more and more acquisitions locally, especially for things that are important to national security, from Abu Dhabi Inc. and Dubai and Saudi. I think just generally across the board.
When I heard the news, I was like, what company is exactly CPX, and what's the history of CPX? Going through the news, it's like it was created 2 or 3 years ago with 500 employees. It didn't make sense to me. And then I realized that it was a rebrand from another company that was called Dark Matter, which was rebranded into Digital 14 then CPX. And that was maybe 20 years ago, since 2004, 2005. And it was actually the UAE's answer to Palantir, or the Palantir of the UAE, let's say. It's owned by G42, like you mentioned, and G42 is a multi-billion-dollar tech group owned by Mubadala and ADQ. And
have seen anything like G42 ever. Like that's
it's huge. They are,
and that's the way
they
forward.
have a mandate. They have the mandate to create national technology giants for the country, and they're into multiple industries, like in cybersecurity. They're in AI. They tried with Jace, which is an Arabic
nuclear site soon. That's the only thing.
Space tech, health tech, everything. Yeah, they're everywhere, and they launched a huge fund, growth stage fund.
Just the background here: G42 is shared by the same person who runs almost most of the sovereign money for Abu Dhabi. G42 can do whatever it's want in the world. I don't think Sheikh Tahnoon. I cannot think of anyone in the region that is more powerful on the business side than Sheikh Tahnoon, and I don't think of even one in the world. maybe other than the likes of Elon Musk and these guys who have access to cash right now to do whatever he wants, as much as this, as much of His Excellency. I think people, and I would love to jump on other ecosystems here. I think the role of the government and the region haven't been the greatest role ever. But I'm so happy to see the UAE doing what it's doing for several reasons. Reason number one is, if the American government did not give Google Maps its technology through one of its venture capital arms, that was the American army giving Google its technology, basically. We would have seen Google Maps. If the American government did not allow and develop an GPS, we would have seen anything. I'm so sorry, internet is developed by the government, GPS was developed by the government. Almost everything we use today as an infrastructure historically was developed either in the in the UK or in the US by literally the government. Most of those innovations actually came out of war. Internet came technically out of war. And maybe if the war did not happen, we wouldn't have seen it. Fusion came out of war, and we're about to finally harness that after we walked away from nuclear for a very long time for reasons that are very obvious. But what I'm trying to say here is the government have a much bigger role to play than running events and hackathons and being a fund of fund. And
I can totally appreciate that more.
actually,
So my question is this. Here's my question.
go ahead.
So the UAE and many other sovereign wealth funds are trying to create big tech that can compete with Silicon Valley giants, especially with the AI era and all of that. Do you think they have a better chance of winning big tech in the future and the tech race versus VC-funded companies, like state-built or state-owned companies versus VC-funded companies?
100%.
Which one do you think can win?
100%. I think the Chinese model is what works for us in the Middle East. I don't think the American model will work for us. We don't have open economies. We are not capitalist economies. We're capitalist on the surface, but we're extremely monopolies. I can go through industry by industry now, and can you tell me if I can break into how many of these industries in the region? Like, for example, let's take Jordan. We're both from. Can I start a telecom company tomorrow?
It's tough because you need the government to give you a license. Yeah.
The barrier to enter is insane. Can I start an insurance company? Can I start what? A taxi company? No. Like, can I compete with the retail groups? Also no. So in a region where most industries are technically monopolies or hold on by the government or government-owned companies, majority of the companies you deal with in Saudi are BIF-owned. Majority of the companies you deal with in the UAE are the government-owned. In a country like Oman, OIA owns most of the country. Qatar is the same. Bahrain is the same. Kuwait is the same. So if we're in markets that are not free, let's face it, and it's not open for anyone but maybe some of the very global massive players that the governments or some local multi-billion-dollar families are interested in bringing into the region. If that's the only things that the market are open to, yes, I want the government to step in and build. And actually, I think the region is also not ready in many areas. Regulation, talent, and the government has to subsidize that and have to work on it. I cannot wake up tomorrow and say, let's open a 50 privately owned universities that should be as good as Stanford, because no one is going to do that. The government have to pay for it, sadly.
I get your point. In China, for example, they had a 10-year plan for electric cars, and they started right after when Tesla started, and they wanted to dominate, and they were subsidizing and helping all companies, etc. You want to see something like that in the MENA region, in specific industries.
Saudi is doing that.
Yes, they're doing that.
Saudi is building Seer, which is its goal is to produce 500,000 cars a year, EVs. It is a majority, I think, shareholder now at Lucid, arguably the best fancy EV in the world, and they're opening a factory in Saudi. McLaren have a base in Bahrain, fully owned by the Bahraini sovereign fund. Qatar Airways owns a lot of startups in that space. including some of the startups that have insanely significant IB in future of aviation. I think it's really, really hard for me to. There is also still a lot of mistrust and a lot of an insanely tiny venture capital scene. Our venture capitalists we need to live with the fact that all the money we deploy a year is deployed a day in the Bay Area, is deployed a month in London, is deployed a week in China, is deployed a month in India. So if we don't have enough resources, the market is very much a monopoly, and the government almost own everything, and whatever I'm going to do, I'm going to end up competing with the government. Let's say tomorrow Saudi drops all regulation and I can start a telecom with $100,000. How I'm going to compete with STC? Let's say Saudi opens up tomorrow and I can acquire whatever refineries I want. Can I compete with Aramco? The company have $50 billion profits a year or something like that. It's completely fine. There is nothing wrong with our government stepping in, because I feel like in the region we're bullied into believing in ideas that the world might not believe in, or the world is believing in it after a certain level of maturity. If you go to the US 100 years ago and tell the government, do not subsidize, do not go anywhere, do not touch the market, people in the US would have been like, are you crazy? In 2008, even much recent, the government stepped in and literally bailed all the corporates of America, or most of corporates of America would have collapsed. The current American vice president is literally saying globalization doesn't work for us. So I don't think we're in the region we have to obey that. The sense of like, oh, let's open our market and let's give everyone a free ride into our economy. No, our kids should be building that, and our kids should be making this money, because we also need the new generation of billionaires and the new generation of family offices. If we let the Americans own our AI and own our data and own our fusion, so automatically they own our energy, and then on top of all of that own our data, what business do we have left to own?
But here's the problem. We're building nationally and locally and regionally, but ChatGPT, for example, is building globally. DeepSeek is building globally.
Yes.
When G42 tried to build an LLM, it was an Arabic LLM. It was, I think, in the making for 2 years, and I don't think any of you use it. Or
I did use it, and it was as good as ChatGPT 3.5 when it was launched. Falcon was at the global bar of almost everyone else. The thing is that we didn't continue. We also, there is other.
So what happened to it? Not Falcon. It was called, I think, Jace. It's named after a top mountain in the UAE or in Abu Dhabi.
I tried Falcon, honestly, and Falcon is done by another UAE entity, and that was world class. That was very regarded even in the Bay Area. Very well regarded even in the Bay Area. I think what happens is what happens usually in the region. We celebrate too early. We build it and that's it. But honestly, we also have a lot of catch up to do. So I understand why we would build a model for Arabic, because no one is serving us, number one. And then that's going to be a step toward us building our English one. My
criticism on this model is basically incentives for founders or employees. And in a government-owned model, everyone is just an employee working for the government. And the VC-funded model, startups or startup founders are building for themselves with all of the other visions involved, included, but they're building for themselves. They're building their own wealth. And that's why they continue, they persist. They work on something for 10, 15, 20 years until it makes a big success, because they're building their own wealth and the employees with them. How do you see the future owned by government if everyone is just an employee? How can this model succeed and beat the VC funded model if everyone is just an employee?
Okay, there are double-faced answer regarding this question, because it's a very, very important question regarding the win-win situation when we are discussing the returns and the success story. regarding the acquisition. So the startup are happy, the government are happy, and the venture capital, of course, they are backed by this startup. For this startups, of course, we're gonna be happy. And this is as someone supporting early stage startups, as it gives them founders hope for the exits that does not have to come only from IPO or foreign buyers. There's local buyers coming in, and they are good supporters for this exit. And there are new local route for this scale and liquidity. And this could especially inspire entrepreneurs working in AI, health tech, defense-grade solutions, where B2G is often the main revenue driver. So when we are talking about the investment and the ROI and the return coming for this, so this is a success. Where we are contradicting with the monopolism or monopolistic scenario regarding the government. So I pro with Mo actually regarding this, because there are some industries need a lot of support from the government in terms of infrastructure and in terms of the supporting for scalability, because they are having very sensitive data, having very sensitive scenarios when they are defense, and they are competing with big giants of the region and even in the world. So they need very huge support from the government in comparison with other logistics company, or if they are company working in e-commerce. So they can't have this in terms of the barrier of entry regarding the defensibility of the unit economics or the network effect. But when it comes to the deep tech and the cybersecurity startups, here the position and the scenario are going to be different in terms of the who is the right supporter for this industry. Like when we are talking about the biotechnology company, the biotech is totally different than the health tech, or the e-commerce or the logistics, because biotech is very deep tech and it needs a lot of support from different regions. Even we are not in the MENA region, the big supporter for the biotech right now, like Canada or US. But when it comes to this data, so when the support is coming to the government, I think they are in a good hand for the state or for the Abu Dhabi or the region itself. We cannot assume that they are under the control of the government, because this is the scenario that we can expect. It is not an unexpected scenario, even if it is very early. But it is right for giving hope for new startups to dig deep into new solutions and new services and work hand in hand with the government to build a new era of technology regarding the MENA region.
I don't think the incentives have to be that or that. Most of the companies we're talking about here are, technically speaking, private companies. They're privately companies owned partially by the government. Think of them as Huawei in China. Think of them as TikTok. Think of them as all of these companies. The companies we're talking about here is partially or fully owned by the government, and the government will eventually divest and sell part of that. And we have seen, for example, the Emiratis do with Manchester City, for example. They own the full club, and then they sold around 30% of it. And I think we can do the same. We can sell 49% of G42 to more. And that being a private company, that means investors can invest, these companies can go public, employees can have shares, and the founders can stay around. And we don't have to think of this as a governmental establishment. That's a company that the government arguably basically just funded, and the guy have a board of directors that a couple of people on it are government officials. That's it. I don't think that the model of the government investing and giving people access to technology and data would hinder in any way founders' access to shares and incentives.
I think the government as an acquirer, each acquirer has its own pros and cons, okay? I think most founders, and I'm just going to be upfront, I've lived here my whole life. If the government is acquiring you, it's acquiring you for a reason. It's the same way if you have an international acquirer that's coming to you, or a local acquirer that's coming to you, if it's a conglomerate or if it's a public company. Everyone has its own incentives of why it's buying, right? It could be financial, it could be for your tech, it could be an acqui-hire, it could be many of these things, right? If the government is acquiring you, I think founders should underwrite that, yes, maybe, there are incentives that are different than what you want to build, right? So maybe you don't have this, you get a financial incentive up front, and maybe you don't get, you know, your shares, your carry, but you have resources in the back end that you're using from the government that can help you with distribution, that can help you with your product. So look, each acquirer has pros and cons. I think a government coming to the table and being one of those potential acquirers alongside everyone else has its own pros and cons like any other acquirer. So yes, I do see that maybe because of the way that government works and how historically government-related acquisitions have happened in the region, you don't have the same level of upside, but you have resources behind you that could back you in many different ways, whether it be on product distribution, etc. I would say everyone has different incentives. Some government-led initiatives in this country, in Saudi, are financial. Some are national security. Some are for the goodwill of the marketing of the country, right? And you can make different arguments, whether, for example, Mo talked about Manchester City. Was that a marketing exercise for the UAE in terms of their brand, or is that a financial investment in the Premier League, which has really increased in value over a period of time? It's a bit of both, let's be honest. Will they divest? Absolutely. I think with financial investments that are not related to national security of the country, they can actually divest. Silver Lake coming into City is a great success story, honestly. And the Premier League has really increased in value over a period of time. Will it do it for something like a dark matter? I don't think so personally, because I think that's too ingrained with the national security of the country. But it really depends what version of government you're selling to and who's on the other end and what role or incentive the government has to do with the product that they are buying. I think it's as simple as that.
Since we mentioned the City Group, which is arguably the most successful sports investment in the world in the last 10, 15 years. Because a lot of people will accuse us in the region of throwing money at things. If we're throwing money at things, why Silver Lake owns 18% of that club? Why the Chinese, why one of the Chinese top investors own part of that group? This is all I'm trying to say. I think we argue Manchester City is what we should be looking up to. All of us.
I agree. I absolutely agree.
Across all industries, build a massive brand, take an opportunity early. I think the company was the Manchester City was bought for like $300 million. It's worth easily $6-7 billion today, easily, and that's the most successful football club in the last 10 years, next to Real Madrid, which is Real Madrid.
I'm a fan of Barcelona, by the way.
Me too, but you can see.
Sorry about the results
yeah.
recently. Sorry.
Yeah, I know.
You can see.
Well,
Yeah.
I'm a Manchester United fan, so I mean,
I'm a Liverpool
really.
fan, so this is the last time you get to say anything in this podcast.
That's fair enough.
Are you enjoying the 17th place, or is it 16th now?
I think we could be 14th or 15th, Mo. So you know what? It's nice to walk in others. It's nice to walk in other people's shoes sometimes. That's all I'll say. You know, sometimes you need that. You know.
After our 20th title, do you think you guys have any argument now at being the best in England?
Absolutely, no doubt about it. No doubt about it.
Oh God. Okay.
Absolutely, 100%. I mean, technically, that title during COVID doesn't even count, really, does it? And then this year, no one showed up. No one showed up this year.
Bro, we lost 2 titles, 97 and 94 points. You never won a title in your history with anything more than 86 points. Please
Didn't have to.
Respect.
Efficiency is key.
Okay, Jamie, please take us to the next story.
I thought we were turning into the rest of football there for a minute. We might as well just continue in this vein and just scrap the next story. But in any case, I wanna chat about CloudKitchens, which was a peculiar one. Not exactly something I had on my bingo card either last week. Was going through Bloomberg. So yeah, we've Travis Kalanick's of Uber, infamy. CloudKitchens apparently exploring a public listing, not in the US, but in the Gulf, and possibly in the UAE or a Saudi IPO or even a dual listing has been touted as well for its Middle East operations. So apparently Goldman Sachs is already on the mandate and more banks are expected to join as well. There's no final word on timing or deal size. But look, it'd be one of the first significant ghost kitchen listings globally, and potentially happening in the Gulf as well. I suppose a quick rewind would be helpful as well in terms of the relationship CloudKitchens has with the region. So back in 2019, raised $400 million from PIF, and also PIF obviously backing Uber previously as well back in 2016, 3.5 billion investment whilst Kalanick was still the CEO. Cloud Kitchens in the Middle East operates under the Kitchen Park brand, the UAE, Saudi and Kuwait. So leases commercial kitchen space, restaurants, logistics, delivery support. I think we're all familiar with the Cloud Kitchen model. So look, I think it's a super interesting one. It also puts Cloud Kitchens in direct contrast, I suppose, with Kitopi, Dubai-based kitchen outfit backed by SoftBank. Once we've seen Kitopi, I suppose, pivot into full service operations, and they've opened some physical locations as well. Cloud Kitchens, by comparison, has stayed laser focused on the infrastructure and the sort of the pick and shovel approach. But look, it's a super interesting one. And I suppose, what does it say about the region that a company like Cloud Kitchens is, skipping NASDAQ and going straight to that Tadawul or ADX or the Dubai financial market?
I was just wanted to ask you, what's the first question that comes to mind? And this is actually the first question that came to my mind. Why not in the US? Why come to Saudi? Is it wait. Is it genuinely a good opportunity because of the Talabat IPO, the huge success of Talabat IPO in the UAE, or it's not really working in the US and they want to cash out from here because there's an IPO hype?
Yeah, okay. I got impressed for this story regarding the Cloud Kitchen IPO and Saudi Arabia. So this growing role of the Gulf as a viable IPO exit route for tech startups. This is the fact that PIF-backed ventures are maturing towards listing, showing this is a vision regarding the future vision of the Gulf area, just about the infrastructure and about the real capital market reform. So, however, this Cloud Kitchen entering this space is dominating and diversified this for investors, whether for profitability metrics and local market fit. So the IPO is very rare for the tech startups and tech companies. So this could set a pricing precedent for raising the question for around the unit economics in the food tech. So this is very important for the upcoming startups coming for the IPOs in the Gulf to be considered, and to have like a friendly market for the IPO in the Gulf area for the Saudi. So exploring this listing and showing the institutional confidence regarding this acquisition and the IPO, this could put it off for creating regional benchmark for this exit in food tech. And actually for this interesting to watch the IPO momentum turns into long-term value and fast cash exit. And we witnessed the story internally at VC for the IPO and Saudi Arabia, and how this is very booming right now in terms of the diversity of industries and the willingness for the government for the building the infrastructure, attracting different IPOs, and this momentum for the Gulf and the Saudi in specific. So this is turning the story for this kitchen IPO differently in Saudi Arabia versus UAE, giving the consumer habits and the government's support level system. This is very strong support from the government coming from different stakeholders. And actually, I would think this is a lot of IPOs coming in the pipeline for these sectors in specific, after Kita entering the Saudi market for in competing with the Hunger Station, and this industry in the food tech overall, whether e-commerce and the food and beverage and the cloud kitchen, is very, very strong in Saudi Arabia in specific, because the consumer behavior is a bit different, and this industry is very focusing in terms of all venture capital and the investments and for the exit right now with this story. And they boomed for this right market in Saudi Arabia because I think the upcoming infrastructure and the different will be different than other regions.
Okay, it's two things in my opinion, and it's quite simple from my perspective. One is their biggest backer has been PIF historically. So there's an incentive from the existing investors to list locally, especially for PIF. And two is there is a valuation premium right now for listing on Tadawul. The multiples you can get on listing on Tadawul are far superior than listing on the US and the UK stock exchanges. So it's a great example of a primarily global/US company with Saudi investors, with Saudi presence, listing on Tadawul. You have the best of both worlds kind of coming in, and you get a valuation premium, and your IPO is going to pop because of the support for IPOs, whether that is genuine or not is a question, or how much it's being pushed domestically is a question, but there is support across the board to prop up or to push the price of the IPOs, or to have regional demand and domestic demand for these IPOs. So there is demand. There's a premium for the people who are listing, and they're going to get a higher valuation. So all the incentives are allowing you to list. To take a step back, I actually wouldn't be surprised if there's, down the line, if this continues in the next 1 or 2 years, you don't see, and this is a little bit rare, there's always going to be a test case, 1 or 2 global companies having a dual listing, or initially a first listing in Saudi and a second listing somewhere else, just take advantage of that valuation premium because people are willing to give it, right? I think the question really is, and I haven't done this analysis, I'm not sure if you guys have, there's a big pop on the first day to push to keep the price where it is, especially on the multiple side. Does it stay? I haven't done that analysis for the listings on Tadawul, but I think that'd be interesting to see, because most people are locked up, right, for 6 months.
Mo, what do you think?
3 things. Travis cannot list in the US. He have the worst
Yeah.
whatever you want to call it in the world. He's closer to jail than an IPO in the US, realistically. So the guy is done with the Bay Area, and I don't think anyone would give him money there. And this is why he got all the money he got from BIF. I'm not gonna question if that money should have went to Travis or not. I'm not an analyst. I'm an analyst on that deal, or I didn't take that decision. So Travis simply, as a person, cannot list in the US. He have a very, very bad reputation, and we all know how he exited Uber and how things were messy. That's the reason number 1. Reason number 2, if he goes public on NASDAQ, I highly doubt NASDAQ will list him. Maybe New York Exchange. He will lose 90% of the valuation of this company within the first 3 months max. With the minute everyone locked, everyone is going to try to sell for whatever value it is, because I do believe
when they're unlocked, yeah.
Yeah, I believe the company is insanely overvalued. 3 is the region is a great place to list because it simply allows you to simply have those brackets that stop you from losing every day. But you said Talabat success. I would argue that was no success in any way. Talabat have lost. Talabat went public, peaked at 1.640. Since then, 17% down. So, and I'm looking now at a period from January 8 till today. I'm not sure honestly if any tech companies will go public anytime soon or at all. I think everyone in the Bay Area is getting ready for, and this is why there is many funds in the Bay Area now are raising for private equity, separate funds from their early stage and growth funds, because we're not going to go public. It's very obvious that retail investors do not look at tech companies the way they used to look at. Like look for example, let's take for example superior companies like ARM, for example. ARM is arguably holds on the world's most important IP. Its stock is insanely volatile. In the Middle East also, we don't have much retail investors, and that gives companies really, really huge bandwidth to do whatever they want, because what is the worst can happen? 5% a day.
So what's an alternative exit if you don't go public and the company is too big to be acquired by someone else?
Yeah, you keep raising from private equity.
You just keep raising.
Yeah.
How about the other investors?
They liquidate when the private equity firms come in.
So secondaries.
Yeah, there is no like what tech IPO that did well. What tech IPO you can remember in the last 5 years that is 50% up to date? The whole thing is, if I do have a company right now that I really want to raise through a public market, I'll definitely go to Saudi or the UAE or even Egypt or anywhere that basically the stock market regulation does not allow me to lose 20-30% of my company a day.
I think just to jump in here, I think what the company is more scared of, if you look at CloudKitchen's model, it's not Kitopi, it's not a full stack kitchen. They're a rental, it's a leasing play. This is a real estate company
It's a real estate
that has
company.
that has a tech multiple.
It's another
So that
WeWork in a way.
exactly where I was gonna go. I don't want to use those words directly because I think the connotation of WeWork nowadays is a bit, bit overblown. But I agree with you in the sense that it's a real estate company that has a tech multiple, and the last precedent for that was WeWork. So you're absolutely right.
So I take it you will not invest or buy the stock for this company.
Honestly, that's a financial advice, and you know how I go always with financial advice.
Yeah. No financial advice. Yeah.
But would I go buy in it? No, I'm not a real estate investor. And the last time someone got so excited about real estate investment in a similar way, the situation was WeWork.
Yeah.
And we all know how that ended. Adam did well. We didn't. No one did, but Adam did well. He took $1 billion home and started a new company and getting hundreds of millions of dollars of funding for his new company. So he's doing fine.
Yeah. Before we wrap up, a big thanks to OCTA for sponsoring today's episode.
Yes, if you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is weareocta.com, and take control of your accounts receivable today.
Well, that's a wrap. Thank you so much, Amira, Arnav, and Mo, for such a juicy episode. I love this episode. Thank you so much, and would love to see you soon.